Let's go through today's trades. So today was Monday and there was no news coming out today. Therefore, we knew the market was going to be choppy. Also, there is a lot of key economic data coming out this week, including FOMC. So the market was always going to move sideways. However, if you have your levels drawn out, there is always profits to be made in the charts. For example, okay, we had this low, this high, this low as well, and this low marked out. So market opened up last night and began to head towards this high that would have been here. You could even mark this high here from the previous day. Okay, we'll mark that high. Now, what happened? Market hit that level. There was a bit of a sell-off, hit the level again, and we sold off. So then we marked the new high there. That's the new high there. Then the market goes up, tests it again, sweeps the liquidity and comes down. So we can move that level up to here. Now throughout the day, I literally realized that there was an order block here and there was an order block right here. So I took a few shorts and a few calls to just scalp in between these two order blocks. This is where the move started. This is where the move ended and changed direction. So we've got two order blocks here. So when the market came down and bounced off here, you could have taken a long. Even when the market rejected the order block here, if you caught this move down, you would have still caught a nice 6-point move. Not bad. However, we had the daily 20-day moving average above. 5 days there, there's a 20. Now, the reason why this got defended so much is because if the market decides to get above here and close, we are now officially bullish. While we are below, and even below the 5, it's bearish. So the market stayed between the 20 and the 5 because there's economic data coming out. So it didn't want to, the bears didn't want to lose control, and the bulls didn't want to give up control and get below the 5, where you can see there. So we chopped in between two. Now the two main trades that I took, and for those that are in the community will know this, that at 2 o'clock, by this time now, this order block had gone, so we can delete that. All right. At 2 o'clock every single day, the market decides to either sell off or it will buy aggressively. Okay. If you go back to the charts, you will notice it. Last week, it happened every single day apart from Tuesday. So for the market to be heading up here, and I'll set this to New York time so you can see, heading up towards the last place of rejection. Okay, last place of rejection was a 20-day moving average, and we rejected from there twice. So if the market to be heading up there, coming towards 2 o'clock, and then we reject it with volume, the play was always coming. Okay, so I took a position here, and I got out of it at this order block right here. Wish I hadn't, because the market then tanked even more. But if you pair this up with the EMAs, or even if you just paired it up with the 200, I'm going to turn off the 20 because there's a 20 on this. If you just had the 200 EMA, you can see that once we got to this order block, there was pullback, and then we rejected with low volume off the 200, and then the next move down was almost a, well, it was a 20-point move. Okay, one contract, that's $100. If you're trading multiple accounts, the aim is to have 20 accounts going at the same time. You've just done a £2,000 trade all the way down to here. Now what ended up happening is people saw this candle and started to sell. And what happened here? lots and lots of people got trapped. So at this point here, I recognize that this is one of our liquidity zones. It clearly has got swept, again, and ended up with a green candle. So I took buys here and I got out somewhere around here. Only reason being is because I had an appointment, so I had to leave the house. But you can see that the market, as I always say, the market only goes to two places: where there is imbalance and where there is liquidity. Today, there was clearly liquidity at this liquidity level here and the 20-day moving average, and at our liquidity level here. There was also a liquidity level here, so why it kept coming back down to here, and so on. Throughout the day also as well, there was plenty of fair value gaps that you could have traded off. But in terms of this move here at 2 o'clock, where I positioned myself was right here. What happened was, after this green candle closed, we created a fair value gap right here. So green candle closed. I'll make this a bit bigger for you so you can see. And we created a fair value gap. Now the way to be sure whether you want to take this 2 o'clock sell-off is, if you don't feel confident in just taking a position off a liquidity level like the 20-day moving average, the daily moving average, you can wait for a fair value gap to get made. Wait for the market to come into it, take your position, put your stop loss just above it, and then you're good to go. There was also a fair value gap created here. As you can see, market came in, tapped it and sold off, and it was in line with the 200-day moving average. So those are just the main two trades, were the short of this fair value gap and the long of this liquidity sweep. But if you had your levels marked, i.e. here, if you had this order block at the bottom, you could have easily have just been patient enough and caught some big moves. Could have caught a trade here, 37 to 52, 37 to 52. Now that is a 15-point move, so 30 points in total. One contract would have made you $150. Okay, one move there, one move there. Now eventually, when you're trading 20 accounts, you just made $3,000 just by being patient, recognizing the order block that's here, understanding that there's a 20-day moving average which forms as a liquidity level which will be getting swept, and there you would have had your trades. Now everyone in the Telegram group knows about this 2 o'clock. So if you just waited and played this move here from 52 to 22, you would have made the same money. Literally, you would have made it in from 1:40 to 3 o'clock. 1 hour and 20-minute move, and then you're done for the day. Okay? So £158.75 on the day. So that brings our total to exactly $1,000.50. Now we are exactly halfway through the valuation. It's taken 8 days, 8 more days, and this account will have passed.